Gabriela, I'm going to start with you. Can we keep this momentum going for the stock market into Q1?
So I think for the end of the year, the calendar is pretty empty of catalysts, so we can continue to grind higher following this theme of stabilization in economic data, less downside risk from Brexit, from trade. I think that's probably in the cards for the rest of the year. Now,
is impeachment a catalyst, this impeachment vote today?
I do not think so. I don't think investors are paying attention to it at all, and rightly so, frankly, because it's not going to result in a conviction in the Senate, and hence it won't change anything in terms of policy and fundamentals. Now, into 2020, though, we need to see a confirmation of this idea around economic stabilization, right, in order for the market to move higher.
Shawn, do you imagine that the market will eventually care about what's happening down in D.C.? What is that trigger point?
I don't think so. And the reason I was actually thinking about this on my way into the studio today, and that is, even with this impeachment hanging in the background, we're still getting trade deals signed. We still got the deal signed with the U.S. and with the U.S., Canada, and Mexico. So I think that gives you a signal that, look, that's going to play out. That's whatever's going to happen there is going to happen. But they're still getting policies signed, and the policies that should matter to investors. That's what you should be keeping your eye on.
What about volatility? I mean, what's going to be the next catalyst? We saw the VIX pop, kind of pulled back. What's going to be the next volatility catalyst?
There's a few things going on with volatility right now, and if you actually look, even though the VIX is incredibly low, I think last time I checked it was sub 12, but if you look at what investors and what traders are doing, they're actually really going far out into the tails and actually hedging for a little bit of shock. It doesn't show up in the VIX, but it shows up in measures of tail risk is what they call it. So that actually has been on the rise over the past couple of days. I think for investors, I'm actually going to start looking at some of the industrial data and some of the business sentiment going into January. So you have on the plus side, you've got progress and some de-escalation in U.S.-China trade, but then you have the impact of Boeing taking production offline. I think that's really going to hit those industrial numbers. So it'll be interesting to see which one sort of wins out, if we're able to still push higher, if businesses become more confident, or if Boeing really just acts as a drag on the manufacturing industrial sector in general.
Gabriela, you mentioned that the market continues to just ignore what's happening down in D.C. At the end of the day, doesn't it just matter that consumers have more money in their pockets? The administration has put more money in the hands of consumers, and they can go out there and spend. Stocks are at record levels.
That's right. I mean, that's been a theme for the past 2 years, this drag on manufacturing, serving as an anchor on growth, whereas the consumer has served as that life vest. And I think absolutely the ingredients are still in place for that to continue into 2020. But a little word of caution, right? Consumption was a bit too strong in the second quarter, growing 4.5%. Third quarter growing 3%, that's too much for U.S. consumption. So we are seeing a little bit of a slowing in the margin here, and that's actually healthy. We'll probably see that on Friday with the PCE data.
All right, want to get over to Jared Blickery now with the world map. What do you see on this Wednesday?
Yeah, mixed picture. In the east, we have the Tokyo, the Nikkei was down about 0.5%. Hong Kong, the Hang Seng was up about 15 basis points. In Frankfurt, the DAX down 0.25%. But if we look at what it's done year to date, we can see it's up over 25%. Not bad. And the CAC 40 putting in a very similar performance here, up about 26% year to date. And then we're going to look at the FTSE in London. That's up about 15 basis points. And pretty quiet here in the U.S. The S&P futures are up about 9 basis points, along with Dow futures and NASDAQ. But I want to take a look at something. This is a tweet, Brian, that you actually brought to my attention. And this is going into the next year. If you have 20% gains, what happens the following year? Well, the S&P 500, it says, finished the following year 19 of 24 times, almost 80%, with an average gain of 13%.
Jared, thanks for the follow. I appreciate it.
You got it.
That's a pretty good chart. I don't remember tweeting it, but clearly I did.
Jared will find, he's our technical analyst, he will find that stuff, he will dig, and he will find it. Yep. And we have the opening bell about to be rung at the New York Stock Exchange and the NASDAQ. We saw modest gains across the board for the major indices. We don't expect a lot of action today, not a lot of catalysts as we've been talking about here, with just a couple of weeks left in 2019. Looks like the Dow Jones Industrial Average is going to start the day on the plus side by about 28 points. I want to talk about what's going to move us higher in 2020, because the consumer was the pillar of the economy this year. Could it, dare we say, be housing next year? We got really nice numbers recently. Construction of single-family homes, highest since January. Permits for single-family homes, highest since July of 2007. Is housing going to do it for us in 2020?
And right now, it is looking like that, especially when you get the permits also building up, because those actually eventually turn into starts. And we've also seen that there were actually some permits that were signed behind, and those haven't even been started yet, which actually turns into a backlog for a lot of these home builders. So you could actually maybe look at some of these home builder stocks going into 2020, because this isn't even the big home building season right now. That's actually going to play out into the spring. So it'll be interesting to see if this momentum carries over, or if there's just some strange pull-through effect going on, because you have to remember we do have mortgage rates that have been falling all year long. I think that's what's been a little bit of a big tailwind for housing, and I'm going to be interested to see if this is pull-through or if this is going to carry on into the spring.
Yeah, go ahead.
Oh, I was just going to say it's absolutely incredible to see the effect that this 100 basis point fall in mortgage rates has had in housing. It's been an incredible tailwind. The only issue is in terms of actual growth, even though housing is doing great, it can only really add about 10 basis points to GDP. So unfortunately, we don't think we can do that much better than the soft landing we've engineered of 2% growth in 2020. So the good news, I think, for this year is we've had great returns. The bad news is we've had great returns. So we're starting 2020 with much higher valuations. So even though the fundamentals can be positive, our expectations are only for mid-single digit returns.
I would argue that this year we haven't seen the wealth effect play out. Does that play out in 2020?
In terms of housing?
Yeah, buying housing, even more so in the consumer land.
No, that's fair. This 10 basis point estimate is only the direct impact of housing, but there's also the wealth effect. But anyway, I don't think consumption can grow too much faster than 2% next year.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.